welcome to Pries Capital. You must be the new recruit.
Oh, is this the new recruit?
Yes, it is.
Awesome. Follow me, Mr. Superstar. Here at Pries Capital, we love showcasing art. This stunning bronze dragon sculpture, Kiko, by the renowned artist Nano Lopez, is definitely a showstopper. And these pieces on the walls, the legendary Michael Godard is practically a rock star in the art world. There's art all over the office, creating a vibrant, creative atmosphere to work in and collaborate in. And here is Tyler Pries, our hardworking mortgage loan officer. If you're looking to purchase real estate in the Myrtle Beach area, Tyler's the guy to know.
Looks like you have your hands full. Ashlyn, can you grab a book for him? And I'll see you at the meeting.
And here's Raj, one of Jason's right-hand guys for commodities trading. Good morning, Raj.
Good morning.
Meet the new recruit.
Hi. Hope you like to work hard and play hard. This is a high-stakes environment. Split-second decisions can make or break an opportunity. Welcome to the firm.
Don't worry about Raj. He's a quiet powerhouse, but he's critical to everything we do here. And here's the founder and real estate powerhouse herself, Tina Price.
Good morning. How are you? So glad to have you with us. Can't wait to see you in action. We're just about ready to start the meeting for Jason's market analysis. I will see you both in the conference room.
Good morning, Jason. This is the new recruit.
Hey, welcome. We're glad to have you here. Your skill set is exactly what we need. I love people dedicated to their craft. But hey, I got to get ready for this morning's analysis, so I'll see you in a bit.
Thanks, Jason. You're awesome. Right here, we have one of our many conference rooms. And down the hallway over here, we have the intelligent and sharp-eyed Miss Jill.
Why, thank you, Ashlyn. Nice to meet you.
Jill thrives in the world of spreadsheets, balance sheets, and financial forecasts.
You'll fit right in, so go check out your new office.
And here's your new office. And over here, we have some welcome goodies for you. Just a small thank you of saying welcome to the family. Okay, so I've got to get ready for the meeting, but check out the gym over here, grab some coffee and bagels in this room to the right, and then I'll meet you in the conference room.
Good morning. Thanks for joining us. Go ahead, take a seat. Welcome back to another morning market analysis. Let's get comfortable and dive in.
Good morning. The breakout pullback setup is the easy money play for Wednesday. Great job navigating yesterday's rally. Now let's capitalize on today's follow through. The strong move higher tells us exactly what the crowd is thinking. Everyone wants to buy a pullback. And when everyone's thinking the same thing, the key is not just to follow, but to time it perfectly. Welcome back to another Team Day Trader edition of the Daily Market Analysis. Grab your coffee or drink of choice. I got a water here. Get comfortable and let's dive in. As always, subscribe and check out the resources linked in the description to stay ahead of the game. Really quick, just want to, well, let's just get into the news headlines first. Let's get into this, right? Brought to you by Y-Charts. And as we walk into this morning's open, this is just a routine that I just do. So I'm doing my normal routine. You guys get to live through this live. So every time I open up this morning, or every morning in the morning, I kind of go through Y-Charts, their market commentary, just to kind of, set the tone, get my head thinking right. But going into today, right, we do know that we are looking at a gap higher in the market. So S&P is up, Dow is up, and NASDAQ is up, Russell is up. Russell's up marginal. Economic calendar is relatively light. The only thing we had this morning was the Mortgage Bankers Association, the mortgage applications, and again, this showed a modest increase in applications despite a little bit of higher rates. 10-year sitting at 4.87. A little bit lower than yesterday. Yesterday's close was 41.09. We're at 40.89. So a little lower yesterday. So again, or from yesterday to today. But again, that these are weekly numbers. So those mortgage applications, a little increase. Positive news. Oh, what else is in the headlines? Anything stock related? Market increasing. So again, increasing expectations on the Federal Reserve on its rates. We're going to look at that. I got the watch tool up. I did skim this a little bit. I am watching Cisco Systems after the bell. I'll be watching that. Other than that, I didn't see anything as far as earnings calendar that are notable. I mean, they note a few different companies on here. Y-Charts does. I'm not interested in any of those. Crude, again, falling back into that range, that's low 60s. It's been hovering the last 5 or 6 days in between like 59.50, 60.50, that dollar range, really range bound. But again, as this consolidates and we break out, I am positioned on long on crude, so that's where I'm at. I don't have anything gold. I know gold's been just a wrecking ball higher, but I'm not in. I don't have anything into that right now. Right, that kind of got out when it was around 4,000, and obviously it went higher. It's pulled back, and we're sitting around 5,200. So, I'm just watching that. I'd like to get a little bit nicer pullback in that to get back into the gold metal. Other than that, the other thing, there's a lot of Fed speakers I think are coming out today talking, so keep your eyes on that. We'll be paying attention to that. The other thing is the shutdown, right? So we should have the House of Representatives vote in the afternoon on the bill, right? Obviously, the Benton market says they're going to pass that. Trump's going to sign it. Hopefully, we get non-farm payrolls on Friday. We'll see. That's still up in the air. Let's move into the Fed Watch tool. As per the usual routine, right? We talked about this yesterday, going from 91%, right? Fed came out, Powell came out, said that December was, may or may not be on the table. That took the Benton markets down to 62 a week ago, 62%, raised to 66% yesterday, and today we're sitting at 65. So a little less chance from one day to the next, but one day to the next isn't a big deal. I'm usually looking at like 1 week out and 1 month out. Those are kind of how I look at that. If we look at the probabilities, right, same thing as we talked yesterday. We're still, right, 1 into the end of the year, and then 2 sometime in that first quarter. I'm sorry. So really just the 1 into the end of the year. Nothing changes until in the first quarter, and then they got another cut going into the summer, and then we have really one more cut. So 3 cuts overall for basically into 2028. Obviously, that's going to change as time progresses, but that's how the betting market. That's how the Fed fund futures are. What I would say, placing bets. That's how they're betting on the probabilities. So, another cut coming in December, even though the Fed tries to act a little hawkish. I'm also leaning that there'll probably be a cut come December, unless something comes out. But I'd be curious at how this data on the non-farm payrolls plays out as the government reopens and we start getting some of that data come through, whether it be non-farm payrolls and or the CPI numbers come through. So let's get into trading. right? That's why we're here. That's why we're here to make money. This morning's picture, when I was writing this morning newsletter, obviously at 7:25, it's an hour-ish later, we were up 23.25 points. We're now, well, haven't really changed, right? So we're up 24.50. So nothing's really changed. I do want to note this because this is very important going in today's trading is we have a strong 5.14% net long volume delta in the overnight. That is important to note. It is skewed. Skewed net long, and it's by a large percent. About 5% is a strong directional bias. Just kind of give you guys something to think about is 0 to 2% is usually like a neutral skew, neutral to slight skew. 2 to 5% is a moderate, and anything like 5 to 10% is a really strong directional bias. That, in the context of overnight and then trading into regular trading hours, whole point of why I do net long, net short volume deltas is in that overnight trading, right? It's usually thin market structure, right? Not a lot of volume, but when it's consolidated in a strong direction one way or another, right? It kind of helps set up the context of, as the market opens, does any of that volume delta get corrected, or anybody who was tilted in one strong direction, are they getting paid, right? So let's just say, like in this context, the market's higher and there is a higher net long, strong net long volume delta, right? So what are they doing is they're buying high, right? So and so if the market opens up and then it starts selling off, right? Those people are long at the highs, right? And so they're going to quickly get out, and that can really cascade into a strong pullback in the market, right? You can kind of elevate the strength, right? The momentum, and the tempo. Really, I'm just thinking of like tempo in the market. So those weak hands are quick to get out. Now, if they're correct and they have that strong net long volume delta, right, then the gap will stay a gap in the charts, right? And then you'll want to go with that gap. But it kind of makes it easy as a trader. Again, right? Trading is neither hard nor easy, right? But it's on a spectrum, right? So think of like there's easy and then there's hard on a day, like given any day trading. And sometimes the market comes in and it really, you wake up in the morning, you're looking at the chart and you're assessing it, and however it's setting up, it's a little bit harder. Some days are harder than others. Some little nuances in the market, kind of tilts that spectrum down into the easier trade than the harder trade. So this is a signal that I usually do when I'm trading, is I'm always calculating the volume delta, their skew in the overnight session. So again, I know that was long-winded. I just, sometimes there's always newer traders come into the stream, and I always feel like I'm reiterating things, but this is YouTube, so it's not like it's a controlled environment. Everybody's in the office. You get a new guy, I can talk to him behind the scenes. This is just, it's YouTube, so who knows who's watching. But we do have, right, so it's confirming a bullish control in the overnight session. We are opening out of balance. We'll talk about that as we get into the trigger chart. And then again, the 10-day average true range yesterday was 76. Today, the new calculation is 76.75, right? So again, it's this volatility gives us plenty of room to work the setups efficiently. As we talk and as I go through the charts, right, just to kind of things to note this morning is I'm looking for a breakout pullback. I'm looking, because we are have gap rules in play. I am looking at trading day trade setup type 1, which is a gap rule. We'll kind of talk about that as we get into the trigger chart. And then again, as then the market reveals itself, right, as we get into noticing the strong volume delta, we'll either trade, day trade type 6, which is an established balance trade type, or day trade type 4, which is a breakout pullback for the continuation in this bullish move. So again, the goal is to use strength as confirmation, not assumptions, and the market will tell us when it's ready to pay up. So key levels to watch: 68, 48 and a quarter. Right, we'll talk about that on the volume profile chart. Why that support zone is key. And then watch that deeper level. I know we've talked about this kind of into last week, and it's a continuation. I think last week we were looking at 68.09. This week, right, with volumes trading, that moved up to 68.10 and a 10.50, that major LVN. So that's really the line in the sand. If price gets below that, which we'll show you on the chart, really back to opening up, sellers, come back into the fold. Yesterday was the do or die. Either sellers were gonna capitalize from last week's kind of hourly downtrend, and they weak hands as usual, and buyers are in control. That was signaled yesterday, so we got it, but now we're at the highs, right? We're gapping up, now we're looking at trying to get in at good trade location, and I'll talk about how to get in that on that good trade location and what you're looking for. We're going to look at 68.79.50. Right, again, that's the gap, so that's a key level. Again, thinking about day trade type 6, day trade type 4, and then again that I can't reiterate enough. We get below that 68, 48 and a quarter, and I'll show you how that plays out. And that will then, as I talked about before, trigger back to the sellers having recapture and control. Today is simple: buying the pullbacks into strength and sell exhaustion into weakness. So with that said, we'll get this off the chart. And let's flip to volume profiles. Okay. As we look at chart 2 of my chart pack, this volume, this is an hourly chart, right? And so we talked about this yesterday. Either this was going to be a trap, right? And this was going to roll over. Buyers open, we opened up. It consolidated, and then later in the afternoon, right, they broke it out. So this did confirm, right? We have a confirmation that this was, right? You had a strong move. You had a spike in channel. Pull back, breakout again, and then again you had a flag. So then we're flagging back, and then you had a breakout, and then again we're back into, this is a large spike in channel. And then we break into another spike in channel here, right? So again, this pattern is very similar to this right here. It's just a smaller scale, right? This is just a larger in scale, but if you look at it, it's the same pattern. So again, we're into a spike in channel. And again, if anybody knows, back tested these patterns, right? You get a spike in channel. You get a pullback, same thing here, spike in channel. It pulls back to around the base of that spike, right? Base of the spike. And then it's a continuation. Now, where is it then if it fails, right? Because every pattern, as you back test these things, there is failures to them. There's never really a setup that is 100% accurate. There's a percentage of failure. So when you're looking at this failure, right, we got, and again, we'll talk about the gaps anyways, but if this spike and channel fails, right, we'll fill that gap, and then we'll look at this as, you know, does that hold in the gap, and then the buyers, you know, take over. Again, there's strong 5% net long volume delta, so the skew is pretty strong. So they're going to want to defend that. If not, right, we talk about these things, if then. So if this happens, then this happens next. And then if it doesn't happen, if this happens and the then it is not correct, right? If it doesn't do what it's supposed to do, right, then you got a failure, or it's wrong, however it is, and then you got to adjust your trading however you're positioned. But with the overnight delta being as strong as it is, right, this should hold, that gap should hold, or, you know, we should fill the gap, right, looking for day trade type 1, fill in the gap, and then, you know what I mean, it break off. If it doesn't, right, then that's a telltale that buyers are not as strong as what we are thinking. But overall, I like, you know, I think yesterday told the tale. You know, most of you guys know I was kind of coming in with a short bias, but I told you guys, you know, where I'm wrong, and then, you know, you have to flip. So, you know, you should have setups with rules, and then you should back test them, and then you should that way your confidence level is high. And if you're wrong, know where you're wrong, and then, right, this is an up down game. So if you're short and you're wrong, you flip it long. If you're long and you're wrong, you flip it short. This isn't a hard game to really play once you kind of, you know, watch the charts enough. But this is really looking good, and I'm, you know, as far as being long, targeting all-time highs. I mean, unless this rolls over, again, it's about probabilities, not possibilities. Anything's possible, but probable, you know, after yesterday the buyer showing their hand and scooping that up, you know, I just got to give it to them. We're so close now to the all-time highs. So, you know, really targeting all-time highs. It's just wanting for, right, you just don't want, you're just sitting in bad trade location if you're going to buy at the high, right? You don't really want to buy at the high, and we got a gap. A couple other things that I want to show. Let's go back to the market profile chart. Right? We always like to start off with the weeklies, or I like to start off with the weeklies. So when I'm looking at this chart, right, these are weekly profiles. So this was all of last week's profile, and then this is the developing profile for this week. And as we look, right, we can easily see that last week's static profile, you had a static value area high, right, in and around that. Well, let's just be exact, right? Let's just be exact. Static value area high in last week's profile, 68.59.50, right? And then we're obviously, after yesterday, clearly broke out of that. There's an LVN there, and we're up here trading at, right, 68.96.75. You can see that last week there was this distribution node being built, right? So there was market participants, right? There was a volume profile being built yesterday, or last week. And then as we're trading, right, we're trading inside of that high volume node value area in tonight's overnight session. So again, you know, we're playing around that. We're at the high end, right? So just kind of keeping that in hindsight, or in, you know, in it's like a carry through that, you know, you want to be patient. You really don't want to buy high, you know, wait for that pullback, right? Watch for the pullback. And as we talk later here, we get to the trigger chart, I'll talk about, you know, if it goes higher. So if this just goes higher and it leaves the gap, and we have a gap on the chart, how do we trade that? And we'll talk about that. But right now, it's a buy high for me. I'm looking for the the breakout pullback. We broke out. I'm waiting for the pullback and fill the gap. So again, just kind of more context of, how does this resolve itself as the market opens. Taking that chart off. And again, as we look at daily profiles, right? Again, value on Friday, value to up on Monday, and then again, overlapping to up value in yesterday's session, and then we're trading up here at 68.95.50. So again, value in the overnight session is, overlapping to up. So I think that's, again, it's just market participants, right, are looking for price discovery, right? And they're buying it. So, this isn't where, and I think something that I always like to tell new traders, and maybe some of you guys have heard me talk about this before, but usually at market tops, think of I used to own a car dealership, and so you go to the car auction, and the market turns when there's the sellers or the buyers, right? So as an auction, right? Auctioneer starts out at a price. Somebody flips up their card. If it's a real estate auction or a car auction, right? There's a buyer. They flip out their card. When does that auction end? It ends when the last buyer, is done buying. Then if that auction was to continue, then what would happen? Price would then fall back down. So it's not like aggressive sellers at tops come in and start buying. That's not how institutionals buy. Tops are formed when the last buyer stops buying. Then the price rolls over. And at bottoms, the bottoms usually start when the last seller, stops selling. So it's usually contrary to what people think. People think at a top, sellers come in, they step in. That's not how it works. I don't know how they get that mixed up. But at tops, it's buyers stop buying. So again, as we're looking at the market profile, right? Buyers are continually buying in this market. They haven't stopped accumulating. They're still looking at price discovery. So just kind of food for thought. Just give you guys some market context. Let's move into the trigger chart now. All right, as we move into this is the main chart. This is, guys, probably if you've watched it this long, this is what you're looking for or waiting for, right? So today's trading, before I zoom this in a little bit, right? This is on an hourly chart, so still on hourly charts. Again, I can't, right? Spike into a channel, pull back, spike, a secondary spike into a flag, right? And then again, a spike back into a channel. And again, that same pull back, and then we're here. Same thing, where we pulled back and then we're back into here. So this is just a smaller spike in channel than this one, right? So when we back test this and look, right, there's failures, and how do they fail? And then if they don't fail, how does the continuation play out? So we're opening up. It's now to bring this down into a 5-minute chart. Oops, that's too fat. That's it. 1 day. I need 5 days. So as this is my trigger chart. This is a chart that I usually trade off of. There's still this gap left open from Friday night into Monday morning. So, just kind of keep that in your mental mind, that there's still that gap below. As we go into today, right, we're talking about day trade setup type number 1, which is the gap failure, right? With the inventory at 5%, strong skew, volume skew, I am watching as to this opening up and then coming in. And what I'm watching for is, I'm watching for that pullback. And is it that, as I talked about, 68.79.50, I'm going to be watching that level. And again, with the strong skew, that might be all we get. it's a tag up. And when I say tag up, like that's it. So it's fill in that gap, and these overnight buyers with that strong skew just take it and lift off. And that becomes the trade. Now, if we get a little bit of a deeper pullback, and as we get into this, right, I'll watch. And again, like this, I don't blindly, sometimes people ask, like, Jay, sometimes you put these levels. How do you, right? You're looking for an entry setup. So that's why this is a trigger chart. So I don't just blindly like, oh, I'm just going to blindly buy 68, 79, 50. If you backtest these charts in technical analysis, right, the way that these usually bottoms form is it'll come down in, and then there'll be like a test. It's like a two try. Like they'll try, and then they try, and then that's when it will take off. Or there's two different kind of traps. There's also a two try trap. So sometimes the try is, right, they try once and then they try twice, and these will be like higher lows, and then they'll take off and you get like a strong signal candle. Or it'll come down and it's try once, try twice, and the second one is a trap. It's a two try trap, and then take off. So it'll kind of trap. This will be the hold, and it'll trap underneath this inflection low and then take off. That will be then the trigger, right? So as this comes down in, right, I'm going to be watching. Does it, come in and you get the hold, and then you get a signal candle, and then that's the confirmation and it's the take off? Or does it kind of come through and then slice through that 68, 79? And then, like we said, we're looking for, it has to hold this 68, 48 level. Like that's definitely the must hold. Or the sellers, right? It goes back to, right, we flip back to, then sellers take control. But, we got the static point of control at 68.73. And then I don't really think, you got thin structure in here. And so if they really don't hold that kind of static point of control, this will just kind of fall all the way down. And then, this is thin structure. So there's no support through here. So if you get underneath this kind of high volume node, then you just have thin structure, and they'll slice through this, and then we're back to here. And that's why I say this is the must hold. So I'm watching. You can do whatever you want. I'm watching 68.79. I'll be looking for if that ends up being the two try, right, for the inflection low. If it just slices through that, then I'll be watching right 68.73. Watch how they fiddle in the middle from this previous distribution and end of day yesterday. That's going to be important. And then again, the must hold for the buyers is at 68.48. Now, again, if these are all wrong, right, then you have overhead supply, and those aggressive buyers in overnight, right, can become sellers, and that can then, get this move going. But if just like buyers just clear out, right, and thinking longer time charts, like day charts, right, and the buyers clear out, and there's nobody buying, and then sellers come back in and take back in, they'll trade this down, and they'll get below 68.48, and then they'll come in, and then this will be a hold to pull back, and then a lower. So, that's really getting ahead of myself. Something probably has to go ridiculous, like maybe the House of Representatives says, oh, well, now we don't have enough votes. I don't know. There's always something, right? So, but the thing that you should think about is how people are positioned and who's in pain, who's not in pain, where can the move get brain fart. How can the move accelerate, right? Similar to here, right, where you had this congestion, right, and anybody who sold short, including myself, right, where once you were wrong, I had to buy out of my short position and then flip to long, right? So I have old business, getting rid of my old business, which was my short, right, and then also doing new business to go long and flip. right? And so again, that then pushes that move higher. Anybody who's wrong. So again, anybody who, if this is wrong, right, it'll push it down. Now, so I'm trying to give context in the tempo and how the move can accelerate. But other than that, right, this looks good where we have a trading range. There's high volume node in here. We have the static point of control. There is aggressive skew in the overnight session. So again, I am looking at, as the market opens, we fill this gap and then a higher. And then obviously as that unfolds, we go back to that day trade type 6, day trade type 4, and this accelerates into going back to this longer time frame, right? We do have a virgin point of control at 69.39. As today progresses, as long as we don't get stuck in the mud here and we chop in here, but if we get some kind of good move and acceleration, I would imagine that I'm targeting that virgin point of control of 69.39.25 as the buyers tag that. And then again, you got all-time highs at 69.53.75. And right, that's just like a, short throw of a rock to tag that. You go from 69.39 to 69.53, and you're not even looking at 20 points. So, other than that, that should be rock on. I don't have anything other than that to discuss. I mean, you don't have NVIDIA earnings until the 19th. What's today, the 12th? So, I mean, that's next Wednesday. So, I'm just trying to think of catalysts that could, possibly take a market down, possibly take a market up. All the news is already embedded. We already know about the House of Representatives vote today, so that's already priced into the market. Yeah. The only thing that we don't know is any of the economic news. So, other than getting anything to that, then that's it. Everything else is known. So if it's known, it's already priced in. So there's not too many unknowns right now that's going to be on the docket. And, so first we have to get the House to pass the bill. And then we have to look at, when are they going to announce, non-farm payrolls, catch that up, CPI, yada, yada, yada. So as far as that, hopefully this was helpful in everybody's trading. If you're based or close to Myrtle Beach and you're looking to trade, come meet us in our Myrtle Beach office. We welcome everybody. You can schedule an in-person consultation. You can walk in. The door is usually unlocked, right? So we're usually here. It's just how busy we are. Maybe we get time to talk to you. But if you schedule a in-person consultation, we'll sit down if you're a trader and you're, again, close to Myrtle Beach. If you're looking at real estate, my wife has a real estate brokerage firm. So, kind of investing in real estate, it's kind of a backbone in our personal lives. So if you're interested in something like that, again, stop, have a conversation. We always like to talk to like-minded individuals. Also, mortgages. My son is a loan officer, and so if you're interested in mortgages or questions, come on in, have a conversation, and we can talk about that. One thing I do know, in our private equity house, we are looking at purchasing and as well as looking for individuals starting up or wanting to start up to partner or collaborate with us in community management company. So if you're an HOA community management company, we are looking. If you have one and you don't have an exit strategy, we'd like to have a conversation. We're interested in purchasing existing companies if you're looking to exit strategy out of that. If you're young and ambitious and you've been thinking about opening up a community management company, or you work for a community management company and you're sick of them, you know, that's a conversation that we can have. Maybe we're the financier of that endeavor. Either way, just to let you know, in our private equity structure, we are looking to enhance our community management slice in that in the company. So again, that can be reach out to us at priestcapital.com. Again, if you're looking at trading, teamdaytrader.com is our trading division. Other than that, it kind of takes all that out of the woodwork. So our address is right there. You guys can see that. So stop on by, shoot the shit, go grab a beer or a coffee, whatever is your cup of tea, and you know, we just love enjoying talking markets. So with that said, as always, learn, trade, profit, and I will see you guys tomorrow. Have a good one, guys. Bye.